Good morning, students. We are on chapter number 4 of account part 2, analysis of financial statement. Today, in this lecture, we will talk about tools of analysis of financial statement. Tools of analysis of financial statement. The preparation of financial statement is the last stage under the financial accounting. Yes, we know that. Preparation of financial statement is the last stage under the financial accounting. In this stage, the preparation of income statement and balance sheet are included. We have already studied this in last chapter, how to prepare income statement and balance sheet. We have already learned that chapter, final account of company. In the company form, cash flow statement is also prepared, which we will be learning in the last chapter of this book. In these statements, details of expenses, income, assets, liabilities are disclosed in the form of rupee. All these details are shown in the financial statement in legal form. Many a time it is difficult for a common man to understand them. In order to resolve this problem and to make information of financial statement more understandable, the analysis of statement is done. For this information of more than 1 year is used. For this process, different tools are developed in accounting, and analysis process is done with the use of them, where common size financial statement, comparative statement, and ratio analysis are included. Ratio analysis is discussed in the separate chapter, which is the next one. The explanation of comparative statement and common size statement is as follows. So friends, we know this already. We have seen the meaning of financial statement analysis, that to make information of financial statement more understandable, the analysis of statement is done, and for that analysis, more than 1 year or data of more than 1 year are used, and for that different tools are there, like comparative statement, common size statement, and ratio analysis. So here we are going to talk about the comparative statement and common size statement. Let us talk about the comparative statement first. First of all, comparison of financial statement. The financial information of at least 2 years is required for comparison process. The development details of predetermined period is obtained through comparison. It can be known that which period shows good result and which period shows weak result. In comparative statement, the detail of income statements and or balance sheet of 2 or more than 2 years are compared. So comparison of financial statement that can be done through comparative statement or through common size statement, and under both the types, profit and loss statement and balance sheet are used. So financial statement are compared in two ways. Okay, let us talk about the comparative statement first. See friends, comparative statement. Under this comparative statement, comparative balance sheet and comparative profit and loss statement, that is income statements, are prepared. This comparison is done in horizontal form, thus it is known as horizontal analysis or financial statements. Under this comparison, it can be ascertained that as compared to previous year, what is increase or decrease in items of rupee and in terms of rupees and in terms of percentage during the year. The development trend of business entity can be seen from this kind of analysis. So friends, this statement, this comparative statement, it is prepared in horizontal form. So it is also known as horizontal analysis of financial statement. Under this comparison, it can be ascertained as compared to the previous year whether there is increase or decrease in terms of rupee or in terms of percentage, right? Let's take that example. For example, equity share capital in the year 2016 is 3 lakh and in 17 it's 4 lakh 50,000. So we can easily say that equity share capital has increased by rupees 1 lakh 50,000, because in 2016 it was 3 lakh and then it became 4 lakh 50,000. So it has increased by rupees 1 lakh 50,000. So this is in terms of rupees. Now if we want to find this in terms of percentage, then 1 lakh 50,000 is the increase on 3 lakhs. So 1 lakh 50,000 upon 3 lakh into 100 and you get 50%. So this is called comparative statement, which are prepared in horizontal form. We will learn about this in detail when we will be doing practical sums. Let us talk about the common size statement. Friends, balance sheet and profit and loss statement are considered for this kind of comparative statement. This analysis is done in vertical form, thus it is known as vertical analysis of financial statement. Under this comparison, one base is used for balance sheet. The total of balance sheet is considered as base, and for profit and loss statement, sales is considered as base. So friends, this statement also, that is common size statement also, profit and loss account, that is income statement, and balance sheet are used. Now for this statement, they are prepared in vertical form, so they are also known as vertical analysis of financial statement. And under this comparison, one base is used for balance sheet as well as profit and loss account. For balance sheet, the total of balance sheet is used as a base, and for profit and loss account, sales is used as a base. Let us try to understand this by the example. Suppose the total balance sheet of 2016 is rupees 1 lakh, where non-current assets are 60,000 and current assets are 40,000. While in 2017 the total of balance sheet is 1 lakh 50,000, where non-current assets are 75,000 and current assets are 75,000. Its analysis will be this. During 2016, non-current assets are 60%. How come 60%? Total assets are 1 lakh and out of that 60,000 are the non-current assets. So 60,000 divided by 1 lakh into 100 will give you 60%. So in 2016 or during 2016, non-current assets are 60% of total assets and current assets are 40%. How come this 40%? Total current assets are 40,000 out of 1 lakh of total asset. So 40,000 upon 1 lakh into 100, that give you how much? 40%. So in 2016, 60% are the non-current asset and 40% are the current asset. But when we talk about 2017, non-current assets are 50%, because total assets are 1,50,000 and non-current assets are 75,000. So 75,000 upon 1,50,000 into 100 will give you how much? 50%. And current assets also 50%, because current assets are also 75,000 out of total 1,50,000 of asset. Okay, so this is what analysis of both the year. Now if you want to interpret this, its interpretation will be like, as compared to the previous year, the proportion of current asset reduced from 60% to 50%. We can see that earlier the current assets were non-current asset. Earlier non-current assets were 60%, now it is 50%. So the proportion of non-current assets has reduced from 60% to 50%, while the proportion of current asset is increased from 40% to 50%. Earlier the current assets were 40%, now in 2017 the current assets are 50%. So this is called interpretation. The above explained analysis and interpretation can be done with the help of comparative statement. Okay friends, now let us talk about the characteristics of comparative and common size financial statement. Friends, some common characteristics are there of both, that is comparative statement and common size statement. Let us go through all of them. Characteristics of comparative and common size financial statement. First one, there is information for 2 or more than 2 years. So yes, it is there, we use information from 2 or more than 2 years. Second, the comparison of results of 2 or more than 2 years can be disclosed in the form of rupees. Yes, it can be disclosed in the form of rupees, as we have seen in the example. And then third, the comparison of result of 2 or more than 2 years can be disclosed in the form of percentage. That also we have seen. Now this comparison discloses either increase or decrease. So obviously this comparison shows us whether the particular item has increased or decreased, maybe of balance sheet or of profit and loss account, maybe a liability, asset, or income or expenses, or sales or anything. And fifth one, the trend of component of statement can be known through this comparison. For example, trend of share capital, increase, decrease, or no change. Just we had discussed about that. We will come to know about the trend, whether there is an increasing trend in that particular component or a decreasing, or there is no change. What else? It can be presented in ratio form. So it can be presented in rupees, it can be presented in form of percentage, also in ratio form. What else? Profit and loss statement and balance sheet of the previous year are compared respectively with the profit and loss statement and balance sheet of current year. It means comparison is done. The detailed information of tools of comparison of financial statement are as under. What is the detail? Comparative statement of profit and loss statement, and comparative statement of balance sheet. And what else? Common size statement of profit and loss statement, and common size statement of balance sheet. So friends, this was all about tools of financial analysis or financial statement and their characteristics. So from next lecture we will start with the method to find or to prepare the comparative statement, right? And we will be doing few sums based on that. Thank you.